Hello and welcome to Upside, where every week we dig behind the headlines affecting European venture. Today it is Mads, Lomax and myself, and we are talking about Burnham's Britain. What's he going to do? How AI is creating a new world order. When trade becomes war. FDEs, why big tech is sending in the humans. What's going on in the week ahead? And predictions plus deals of the week. I'm going to do a quick news roundup because there are some items that we're not going to dig into that I thought were actually really interesting this week. Please chime in, gents, wherever you feel friendly. I saw that Rialta Fusion, they are obviously a fusion company. They are now saying that they're generating energy. What is it called? Net positive energy. So it looks like if you read the fine print, they're still burning more than the power out. But if this is true, this is a big deal. SpaceX showed investors a prototype of Musk's new AI device, the one that he said wasn't a phone, that then is looking just like a phone. So that is now out in the wild. Iran barred the IAEA inspectors from Fordow, Natanz, Isfahan, and warned tankers to stick to approved Hormuz routes. So, or face a forceful response. So if you're driving a diesel, fill up today. Gemini 3.5 Pro slipped to July again. And I also saw that Google is leaking brains as well as timelines. Shazir's off to OpenAI, Jumper to Anthropic. We saw a cooling off on their market cap. There's $225 billion wiped off Alphabet in a day. That's at time of pod. That said, Gemini did quietly ship Gemma 4, which is an AI model small enough to run on your laptop, which is, as you guys know, my happy place, local models, on-prem devices. I think the great unbundling to rebundling and stuff going on site is going to be something that we will see much more of. Also, possibly no coincidence that with Apple's new big releases, all of these on-device models, and obviously Google and Apple are in bed together in part. I think we're going to see more of that in September at the Apple launch. So, any thoughts or pokes in the eye on the quick bundle before we move into the main docket?
No, I mean, we are gradually getting closer to the world's first kind of AI hardware device, right? Companion, whatever, what form factor it takes, right? That we're definitely getting closer to that.
Yeah, but more than that, it's the on-chip stuff. So obviously Apple's privacy security mantra is now kind of very strongly playing into their hands. I think if you look at all of the latest gen of their chips, it's all kind of AI on chip, AI on device. So I think this is going to be more of a...
But I think also we are moving towards that, what's the next form factor of the, consumer AI device, as in what's the latest with the OpenAI and Johnny Ive initiative, actually?
I know we had anything on that
earlier in the year.
Let's park this convo because I know that I'm a broken record on this one. Let's talk about Starmer and Burnham because it looks like basically Burnham is in and... not contested, and I've never read so many news articles about a non-PM as if he was PM and it's all, the transition has happened and everything is all copacetic. It's just a really weird thing. So there were lots and lots. I'm looking at 6 or 7 different news stories on what Burnham is going to be doing, his policies, who he is, what he stands for. Obviously, we're trying to work out what he thinks about AI, what he thinks about tech, what he thinks about investing. How is he going to support Reeves's and other initiatives of old, or is he going to come in and rip everyone out and rip everything up? We just don't know. The other thing I saw was he was talking about a 10-year plan. I saw one story in the FT. I thought that's just a really bold move. I mean, obviously everyone knows that they are stuck in for 4 years, but he's launching his 10-year plan. Speaking with those in tech, in government, they obviously don't know if they're going to be jobless. And the challenge that we have, changing governments every 10 minutes, and this will be the 7th prime minister in 10 years, is that they tend to bring in their own teams and they tend to rip up old policies. So one of the byproducts is that there is so much change at a time when we need consistency and we need a clear plan and we need to understand what the playing field is that we're playing on. Anyway, before I waffle on too much, Mads, set this one up. Set up Burnham's Britain. Set up the Manchesterization of the UK and see where we go.
Sure.
There we go. No small feats.
Exactly. I mean, look, we had Neil Shah from the London Stock Exchange on the pod last week, and we talked about the demand side of the big equation. Why don't we have enough capital to be invested in UK companies, etc. And this week, we can maybe look a little bit at the why. First, I think it might be worth looking at the Starmer scorecard. So he's been in for 2 years, which is somewhat shorter than expected.
But not quite the lettuce, right? He did last longer than the lettuce, so maybe we should be thankful for that.
Well, yeah, there is that. It's silver lining and, glass brimming and all that. Look, my verdict is that he's getting a lot of flack. A lot of it is justified, but some things are probably better than people are saying. I think he's genuinely tried to do something about some of the things that will matter longer term. There's been, work on the Planning Act. There's been a grid queue reform. There's been some work on nuclear power. The challenge with some of the stuff is it's got a very long lead time, and so the benefits won't be seen for some time to come. There was also a new AI plan released, and I think 38 of the 50 recommendations have been pushed through. And you could say, why not 50 out of 50? And maybe this was part of the problem. There was just not that sort of desire to really push enough and strongly enough for reform and do the difficult things when they mattered. And we know that on taxes, it's been abysmal. The £25 billion rise in national insurance contributions from companies was really a big contributor to fewer people being employed, which of course is exactly the opposite of what we need. Power is still way too expensive. And the money didn't really believe that things were being fixed in the way they should be. Gilts are more expensive now. G7 is, as kind of the investment level is the lowest in the G7. Stock market listings are the worst in 30 years. So it's just a lot of the stuff that you would have hoped could be improved have not been improved. And so what does that mean as Burnham enters? I think right now he's working very hard to try and make friends with everybody and not offend anybody too much. Markets are largely reading that as continuity. Starmer, the gilts are relatively calm. Sterling is up a little bit. He probably instinctively sits to the left of Starmer, which has a lot of us a little bit worried. Then at the same time, I think the UK fiscal position is so dire that his room to maneuver is relatively limited. If he tries to push on borrowing, yields will just spike and that'll come right back to hurt him. The fear could be that he reaches on taxes. Of course, the Labour went to the election and got a mandate on not raising taxes. And Burnham has said, well, maybe we could look at tweaking taxes a little bit. So that's maybe.
But he's trying to get cute, isn't he? He's trying to get cute with things like, I remember reading him saying things like, he was going to get business rates up in out of city kind of warehousing businesses, as an example, to then be able to give relief to the high street and pubs. So I think he's trying to get cute. I'm not sure what's shuffling deck chairs in the Titanic, but he's trying to get cute with some of this, isn't he?
But that is, of course, what it is. It is exactly shuffling deck chairs. Because unless we try and address some of the fundamental issues we have, nothing is really going to change. And he's going to lumber on. And I think his only hope is then that Reform and Tory will split the vote of the right, and then they can sort of limber on to another term once the election day comes. But it's not a good foundation for building a strong economy. And of course, the problem all goes back to something we talked about before, which has been this desire over the last several decades to build a risk-free society. So everything we are seeing today is a compound set of rules that have been created to try and avoid the issues that come with risk. So we had Grenfell, which is a terrible tragedy, but that led to the Building Safety Act that has totally stopped London house building. So you just can't build anything anymore. You had Maxwell stealing pensioners' money back in the 90s. That led to the Pensions Acts that meant that defined benefits pensions were forced into gilts instead of equities. And therefore, pension and insurers, they used to own about 50% of their funds were in UK shares, and today is like 4%, right? So people are not investing, they're not building, banks can't lend, kind of the risk. In any bank today, there's, nobody can say yes and 50 people can say no. So, but every single step of the way, we put all these rules in place to try and remove risk. And of course, as we know, risk is at the heart of growth. If you can't take risk, there's no reward. And so everyone defaults back to clipping government coupons, and we can see that, welfare spending is, racing towards 400 billion if we're not careful. And of course, that's got real implications for the growth of the country. And if we measure the growth we have missed out on since 2007, if the country had kept growing at the clip it did prior to 2007, we would have a GDP of £10,000 per person higher in the UK today. So, I think the big hope from my side is for the next prime minister, whoever he is, and it does look like it's Burnham, is, let's try and take a little bit more risk again and open up for a society that embraces risks a little bit more, and not just try and sort of be this nanny state that try and eliminate risk everywhere, because it just doesn't work.
He seems to be a bit more chameleon-esque. I mean, I've always seen him slightly left of Starmer. He does seem to be a little bit more charismatic, chameleon-esque, understands the real world. And he'll often talk about his track record at how Manchester and the region was the fastest growing region in the country for a decade. And he often stands on that record. But Lomax, question for you. How would you characterize him? And is having a more charismatic leader, let's assume that he is, I think he is, but let's assume that for a second, is that enough to kind of get the wheels of motion going, do you think?
It's definitely helpful, but it's not enough because of actually the substance that this guy stands for, right? So definitely one of the things that Keir Starmer lacks, evidently, is charisma and narrative and the ability to tell stories and galvanize people and get people behind a big plan and vision. Starmer clearly failed at that. I think Burnham has a little bit more opportunity there because he is more charismatic. However, I would be more, so yes, but I don't think it necessarily fixes, at least from the perspective of people who probably listen to us and us in our own businesses and focus on tech, it's not a good appointment. I mean, remember that the last charismatic mayor who became a prime minister turned out to be a terrible prime minister, right? Okay, you can argue that based on the specifics of that guy's moral compass, but there's still certainly there's a lot to be proven with Burnham. Interestingly, Claude, when I was playing yesterday, gave this definition of Burnham as a soft left interventionist who believes the state should steer the economy wrapped in northern everyman branding. Right, it's actually really good. It's actually a very good sort of smart summary of the guy. Where does it lead to? Certainly bigger state. More tax if, I think he's obviously a bit hamstrung by the previous fiscal rules and the manifesto. I mean, there is a short-term question as to whether he'll call an election. Listening to some political commentators who know obviously politics better than me, saying that you're never going to be more popular than in your third month of office. So if you're going to do it, you should do it in month 3, which would be October, I guess. And anyway, that aside, this is bad for, I think, tech and business, right? Burnham doesn't believe that growth fixes most things in the economy. Right? I think generally, if you're kind of right-leaning or business-friendly, you would kind of be of the opinion that growth and the economy kind of fix most things politically. He doesn't believe that, right? He definitely believes in kind of more state-led or state-aided growth.
He's big on distribution, isn't he? I've seen a number of articles this week and last week talking about how he wants to, as an example in our world, put more AI data centers. I know that obviously OpenAI just cancelled or delayed their Newcastle center, but he wants to put more of these things distributed across the country and this whole redistribution of not wealth necessarily.
He definitely has a sort of more devolved, but also like redistribution away from the south.
Devolution is probably the better word, isn't it? Yeah.
Well, devolution is power, I guess, but he's also talking about distribution of capital and wealth.
And he wants to get the money out of Westminster and give it to wherever, give it to this territory and this government or this council, and get them to solve their own problems, which I think is possibly not that dumb. I don't know.
I think one of the problems that we have is in AI, which is it was the same problem that Starmer faced, and we talked about it here before. There's a great quote in the FT from one insider in the government saying, "Unfettered tech boosterism is a vote loser." right? And I think this was a problem for Starmer, which is that AI actually is largely a vote loser for a lot of people because they're scared of it. They are suspicious of big tech in the US. And so actually, I think Starmer, to give him some credit, managed to tread a reasonable-ish line between a highly AI skeptic population and, actually like doing what the country needs from a business perspective, right? And getting the big tech companies to be involved here and invest. And I know the numbers are small compared to what happens in the US, but you did have like investments from Microsoft and Nvidia, at least they were announced. And there was a kind of openness to that. And, you'll remember Matt Clifford's AI checklist and recommendations, which were adopted in full, many of which we agreed with here in terms of what was needed for the country, in terms of like increasing compute capacity and being friendly to international big tech companies. I think that is going to be very difficult. Burnham doesn't believe that. And I think we're going to see more of a retreat from the Starmer position into a worse place. There's going to be a high degree of skepticism towards the Elon Musks, the Mark Zuckerbergs of this world, even the Jensen Huangs. I think there's going to be, he's talked about it. He's talked about kind of, we want data centers, but we want like AI, we want like sovereign British-owned data centers so we can control our destiny. And again, maybe we'll talk about this later. We talked about it a lot, but like, you can control your own destiny. But if you haven't got any models, then, and the Americans turn it off, then you have a problem. So I feel that there's a high degree of skepticism towards AI robotics as we get into it within the Labour Party, and Burnham comes from an even more like skeptical part of the party than Starmer did, and so it's going to be a problem for our industry, quite frankly.
I hate to say, I think I agree with you, Mads. What do we want from him? How can we be more positive on this front? What can we ask?
Oh, sorry, there's no upside there. Yeah, but yes.
Look, I've sort of already set out what I think is needed. I would say if I were to sort of try and spin it optimistically, it is that sometimes it takes somebody who is a bit, as you said, of a chameleon to push through difficult reform. And if we don't address some of the issues we have around kind of the lack of risk or kind of on the welfare side, the absolute ballooning welfare payments and spending, if we don't address that, the economy will just not recover and we will sink further and further behind. So maybe with the charisma, maybe he is somebody who can do what Starmer couldn't do and push through some of the reforms that are needed. One of the things we saw 12 months ago was that Starmer tried to push through a very, very modest welfare reform and got skewered by his own party. Yeah. And I think that's when he really lost control. And that was the beginning of the end. Can Burnham use the next 3 months to lay up, the kind of pave the way for proper reform, push that through in the budget, and therefore set up the economy for recovery? Well, if he can, I think there's potentially an optimistic scenario ahead of us. So that'll be my upside case.
There's an upside there. Look, and it's definitely like if you have a more charismatic leader, then that's helpful. That offsets a lot of the things that I said. But this is also a guy who says, he doesn't believe in, now we're getting into politics of it, but he doesn't believe in the whipping system or like the way it's used. It's like, well, actually, if you want to push through hard things, you need to get your whips out and actually like push things through, right? And so I do think that, he can say all these nice things, be all charismatic, be all, the kind of dude in a t-shirt who's come down from the north to offer salvation to Westminster.
King of the North.
Yeah, but I do think it's going to be hard for this guy, and I do think it's going to move in a direction that's not great for us. And you can see even how like Donald Trump was describing him. There's going to be a high degree of skepticism from big tech, which is I don't think great for the country. If we could cut the welfare, like the budget, the welfare budget, and we could find the money, or we could initiate growth to actually invest it in our own like sovereign tech capability, great.
But we can find money, Lomax. I mean, Starmer on his deathbed found $15 billion for his new defense push.
He spent it. He spent it. He's not found it. He left the bill for Burnham. Here you go, mate.
There you go. Let me drop this brick on the desk as I depart, skipping down 10 Downing Street. Well, listen, I want to talk a bit more on the broader spectrum of this kind of AI changing the new world order. three stories this week, just for some context. And I know that's a bit of a lofty title for this segment, but I think this is kind of where we're going. We're going to talk a bit more about trade and war and all that kind of intersection in a second. But just on the AI piece for now, the US, we saw, lifted its ban on Anthropic's models, Fable and Mythos, but did not with the ID checks as we expected. Instead, they've got this government-approved safety fix, which basically is just rerouting it through the White House. Two, the White House had OpenAI hold its best model back to a handful of approved partners. So there's a bit of control there. Three, OpenAI suggested handing the US government a 5% stake in OpenAI. That's about $42 billion. And they've asked or suggested that Anthropic, Google, and Meta do the same. So, interesting week. On the American side, the state has gone from regulating to gating to potentially part owning, which obviously that we talk about utility a lot and how this is now too big to fail kind of stuff. What does this mean for founders, investors, and our ecosystem elsewhere in the world? Well, if you're building on top of these things, you know, the most important suppliers that we have are becoming a strategic asset of another government. So I don't know, I'm not going to go into this anymore, but Mads, give us some of the details as to what went on in these three story buckets, and then maybe we can unpack how we see this impacting Europe.
Yeah, 100%. So, Anthropic and OpenAI make formidable models, and they've sort of been hoisted a little bit on their own petard now, in the sense that especially Dario Amodei from Anthropic has been saying for a while, look, the AI is really, really powerful. We need to sort of control it and regulate it. And then what happened was he released some very, very powerful models, and the White House said, listen, you gotta control those, and we're gonna put an export control on it, and you can't let anybody who's not a US citizen access these models. There was a lot of discussion as to whether that was the right response or not, but a lot of people are saying, look, Dario, you were the one who warned about how powerful these models are. So maybe you created some of the trouble for yourself. Well, there's been a lot of sort of shuttle diplomacy between Silicon Valley and Washington and the White House over the last couple of weeks. And the engineers and the people involved have found a way to get a Fable, which is Anthropic's kind of premium model, kind of the most powerful model, the consumer version, if you will, of Mythos, that is has the right guardrails, to get that guardrailed enough that it has been re-released this week. So it's now fully back, but there's some classifier checks that are checking prompts. What does that mean? It means every time somebody prompts the model and asks a question, there is another model that then sits and checks the prompts and tries to figure out, is the user trying to do something malicious with this prompt? Are they trying to create biological weapons or nuclear weapons, or do something they shouldn't be doing? And if they are, there's sort of a gate that comes up and says, no, you're not allowed to do that. Another thing, of course, is the whole question of distillation. The Chinese open source and open weight models have been evolving incredibly quickly. There's been a lot of speculation from the American side that one of the ways they've been able to do that is through what's known as distillation. What is distillation? Well, it's effectively asking the most powerful models questions and then looking at how they think about the answers, and then grabbing those reasoning traces, as they're called, and then embedding them in your own model. And that means you can sort of steal a march on developing a powerful model, because you can see how other models think, and you can mimic and copy how they think, and therefore develop a powerful model. And so another guardrail that sits in the new Fable model from Anthropic is one that says, look, if you're trying to use this model to distill or sort of extract intelligence to learn to make your own, we're gonna block that. So these are some of the things that have been put up, and that means the model is back. The question,
Mads, I saw that the Homeland Security, I mean, a massive American government department was hacked. I wonder, maybe I'm stitching things together that don't belong together, but I'm wondering what's happening. Is distillation happening? It's quite odd that the Fable was then re-released, and then obviously the Homeland Security department got hacked. I wonder if there's a connective tissue between these really powerful models and the US government departments now being able to be hacked in new ways. I don't know if you saw that.
Look, there will never be any shortage of speculation as to nefarious things that could be going on. I think the secular trend is that technology is becoming ever more important. It is becoming ever more powerful, and therefore cybersecurity is becoming ever more vital. And we're only just at the beginning. innings of this. One of the things we've seen in Ukraine is just how much warfare has changed. Right, so that we've sort of gone from trenches and tanks and that sort of thing to drones, but at the same time, there is this cyber war, which is going to reach new proportions of things we haven't seen before, and so we need to be armed, we need to be ready, we need to have the best tools, and this I think is one of the dilemmas we are in the West, and I think the US in particular is in, because on one hand they still have the best models, and many people, Dario included, are saying, look, we should retain these models just for US use. We shouldn't let the Chinese access them. We shouldn't let them copy these models. But every time you do that, the China then responds by creating more and more homegrown capability, simply sort of creating a parallel ecosystem, meaning that US businesses then can't access those markets. And that, long-term gives China an advantage. And so you're sort of damned if you do and damned if you don't. And I think the US is just in a really challenging strategic situation where it can't really figure out what to gatekeep and what to keep open.
I don't think you can gatekeep this stuff. It feels like once the genie is out of the bottle, it's we're there. I mean,
yeah.
Trade secrets aside, it just feels like they're going to get there anyway. It does feel a bit nuclear-ish, but obviously different. Same but different. I'm just wondering now, leaning into the ownership piece and the sovereign piece, maybe Lomax, one for you. Is it a good idea that governments own part of this sovereign control? I don't know if you've got any thoughts on that.
Well, I don't think they need to own any shares in the company to try and exercise control, right? I mean, they can set the laws, the export control laws, whatever in the country. They don't necessarily need to be on the cap table to exercise control, right? So I think the two can actually be separated. This OpenAI, this refers to the 5% offer from Sam Altman to the US government of 5% of the company, right, as a gift or donation. Which
wonder where it'll go. Will it go into Trump's meme coin? I wonder.
He gives instead of fork on his own sword, and then like encourages everyone else to do the same. It's like, well, if we're going to do it, Dario should do it, and
yes,
and so I think that's politics, no, isn't it? I mean, it seems.
Is it, or is it fealty? I don't know.
Well, that's the same thing. I suppose in this case, I mean, because obviously the economic value of those shares is big. I mean, in the context of the US economy, it's not massive. But what is that? That's between $50 and $75 billion worth. So it's not insignificant, assuming, that the value holds. But it's politics, no?
There are multiple questions in it, I think. It's one, should governments own stakes in private companies? Right? That's kind of one fairly fundamental question. Two is, if they should, how should the shares be obtained? Should they be confiscated? Should they be gifted? Should they be bought? Right? Is this a market-based transaction? So there are kind of lots of questions, I think, that are unfolding. And Lomax, I don't know whether you have any thoughts on any of those.
Well, historically, right? I mean, historically, you look at, if you look at like European, like where you had a lot of privatizations in Europe, the government would retain so-called golden share, right? Which would give it certain, particularly for critical industries, which AI clearly is. But in the context of what was then a critical industry in the 80s, like a water company or the postal service or whatever you're privatizing, the government that was from a control perspective at the corporate governance level, right? It may retain some economic rights, but the golden share is more around control, negative control to block, bad actors taking over the company, or certain like major strategic shifts take place.
We're seeing more of it now. We're seeing a bunch of the rail operators. We're seeing some of the water operators come under national control. Well, there have been massive news stories, but it feels like there's more of a push.
Yes, of course. Well, the context is very different with the AI companies because those companies seem to have actually, failed or struggled financially and out in the wild of the private markets. Whereas here you have like ostensibly companies that are performing extremely well. They have no problem in raising money. We know they burn a lot of cash, but we know they have no problem in raising money. So this is and a company effectively, it's very rare for a company to offer itself up to government ownership unless it really, really needed it, right? And that's effectively needed a bailout, right? When the banks in the UK in 2008, 2009, etc. So I think it's a funny one to read. I mean, it's just politics, no, isn't it? I think it's
I put it in the regulatory capture bucket. I put it in the politics bucket. I put it in
but if you're sitting in government and you
greasing
want to
buckets.
regulate AI, you don't need to own shares in the company. I mean,
But listen, what happens when the market does turn? What happens when things? I mean, my thesis, as you both know, is that things are going to become much more on-prem, much more locally centralized, and the enterprise is going to wake up, and all of these smart FDEs that we're going to talk about in a second that are coming through are going to start bringing these things into organizations for security and performance and all those good things. And my prediction for this week is that the AI bubble won't pop. It will just slowly transform. Again, we're going to talk about this in a second, and it will just start to become less financially, what's the right turn of phrase, hectic, and all the kind of these billions and trillions that we're seeing. It's just going to become more of a utility. It's going to become less of a financial gain. And at that point, you know, you might want governments you might want a friendly government to help, you know, you become the key supplier to this department. And governments are going to be huge buyers of these toolkits.
Yeah, but like if you're like one of the
maybe I'm stitching together.
Sorry, yeah. If you're one of the lighthouse AI model companies in the US and you want to, you want like closer ties with government, you don't need to like offer up your shares to them. You lobby, you build relationships, you do that. Like you don't need
same.
Sorry,
same.
Well,
I mean, obviously, people know that Anthropic is not the most popular in the US government, and maybe OpenAI is, but maybe Dario should have done this and not Sam Altman. I don't know, but it feels very similar.
I don't know. It's a funny one that it's very different. If you look, I think Bernie Sanders, who has views on this, is like he'd be like, well, from an economic perspective, we should be taking like 50% of the company because then the the people can benefit from that. That goes to, that's kind of a different model. This is not obviously clearly what Altman and the US.
Well, that's what he said. He said he wants the US population to benefit from the AI boom. He's explicitly said that.
Taxes, but yeah, okay, fine. You know, like
Mads, you're good at politicking. What's your take?
Well, yeah, he's saying that. That's because that's what Trump has said, right? I mean, it's kind of the horseshoe theory of politics, right? Where kind of the left and the right bends around and they sort of almost meet. And what's interesting is that what Trump has said is not too far from what Bernie Sanders has said. They both said it would be sensible for the government to own more of this stuff. And don't forget, the Trump administration already took a share in Intel.
Yeah, 10%, wasn't it?
It's a massive chunk. And so the question is how all of this should be done. And I think it absolutely, to answer the question I posed to you before, Lomax, I do think there's a role for, should we say, the state or the public to own shares in companies, but it should be through arm's length sovereign wealth funds to accumulate wealth. I think one of the challenges we have today are things like pension liabilities. We build up massive pension liabilities. Why? Because we're not saving. So the national insurance that is paid in, all that does is that's just paid out straight away. It's not put aside. And that means that even though people believe that they're paying into national insurance contributions, so there is money for pension in the future, that's actually not what's happening. It's a pay-as-you-go type of plan. I'd much rather see some of that money go into a sovereign wealth style fund or kind of some kind of other superannuation scheme or something where money then is set aside and invested in real companies. And I think that's great, real assets. But do I think they should be owned by the Treasury sort of as a political instrument? Absolutely not. I think it's a disaster because all that is, which is blatantly what Sam and OpenAI are trying to do here, is they're trying to say, listen, we'll give you some shares. Now we become the incumbent. Now there are all these vested interests to say that, hey, listen, we should be the default and you should regulate and we should have a pole position. Why? Because you got a stake in us. I mean, I just think it's terrible for competition. Competition is so important for the way the free market works. So I think there are elements of this that could work, but definitely not the way it's proposed here.
Yeah. Well, let's use that as an excuse to talk about markets and the kind of the broader picture. So we saw in June, pretty much, not just this week gone, but we saw this kind of rotation / meltdown in AI. Just to unpack that a little bit. There were headlines like, bubble burst, trillions wiped out. But if you look behind the numbers, it just kind of tells a slightly different story. For context, first half of the year, S&P up 9.5%, NASDAQ up nearly 13%, Dow at a fresh record, Russell 2000 up almost 22%, best H1 since 91. So you could argue like what meltdown, who cares? But within the Mag 7, the mega caps, so the Microsoft Oracles and the hyperscalers got hit. Zoom out, Nasdaq's peak to trough was only about 6%, which feels a bit routinish. That feels fine. It's already recovered at time of pod. But the money didn't leave. It just moved. It moved down the stack, out of the spenders into the suppliers, namely chips, which we've talked about a lot before. $2 trillion added to Micron, Intel, and AMD in one quarter. Semiconductors now around 20% of the entire S&P, which is a record. 4 times their weight as of 6 years ago. So the money's moving around, rotation. Mads, maybe you can tee up some details around this. Rotation, not meltdown, meltdown, not rotation. Where would you take this one?
Yeah, I think you've sort of already teed it up, Dan. I mean, yes, there has been a sector rotation. You've seen the S&P up. You've seen the Dow up. You've seen the Russell, kind of the smaller stocks, up 22% in the first half of the year. That's the best since 1991. And then we did see a bit of a meltdown in the Max 7 here in June, a little over $2 trillion wiped off. And Microsoft, for example, had a very bad month, kind of worst month since December 2000. So there's been a rotation, as you said, from some type of spenders to suppliers. Of course, everybody is a supplier and a spender. But what's really interesting is everybody's buying stuff from NVIDIA, which is a company with formidable revenue and formidable margins. They're not buying a lot of stuff from the memory makers, right? The kind of the Microns and SK Hynixes and Samsungs of this world, which are also companies, especially the pure play memory makers with very strong revenue growth and very high margins. So some of this there's a level of double counting. And what's interesting is I think this is something that's quite unique, is there's so much value and so much demand in AI that you're seeing multiple layers of the stack with 80% gross margin. That's a bit counterintuitive, right? That you can have both memory at these mega high margins and NVIDIA on top of that, buying the memory, paying so much for it, and also having mega high margins. Okay, so there's...
I saw South Korea.
By the way, that's historically high margins for memory companies, though, right?
Oh,
I mean,
100%.
normally
Never seen
crazy.
anything like it. Yeah.
It's SaaS margins, but I also saw South Korea investing 500 billion, or just over half a trillion, in some memory companies, and just to stay in the game, which I thought was like a massive bet.
Yeah,
Never seen
it
anything
takes
like
a
that
long
before.
time to stand up capacity. There isn't going to be a much more capacity coming online in the next 2 to 3 years. So that means that if demand holds up, margins are going to hold up, and of course that's why the stocks have gone through the roof. But Dan, where do you want to take this? I mean, we could talk a lot about sort of the intricacies of different companies, but is there sort of a bigger question you want to drill into?
Yeah, I mean, I think the main thing on my mind was what next. So I was thinking, obviously, we all know that the Mag 7, the mega caps, we talk about frontiers and hyperscalers, they're doing incredibly well. They're raising big chunks of change. Then we've seen this kind of this move into RAM and chips and the more hardware layer. In my head, I'm thinking, what next? I don't know if either of you got any thoughts on this, but what are we going to see? Where are the next chokeholds, or where are the next bottlenecks in this market? For me, it's energy, and I don't know why we're not seeing more. Maybe it's just not possible to transform in the same way. I don't know, but to me, there's the power piece, which I think is going to be the next massive move of investment that we see. But I don't know if you have any thoughts on that, Mads, before I hand over to Lomax.
Well, it's super regulated and hard to stand up capacity in a hurry. I mean, I guess the question you might ask is, could the people that produce the gas peakers, could they just triple the prices? And I think, yes, you have seen some price inflation, but what they have been resistant to is to stand up more capacity. That's one of the reasons why, we have these chokeholds, and, folks are saying, look, we just don't believe that we're going to need and see this demand for many, many years to come. It's very cyclical. We've been here before. It's always boom and bust. Don't forget, this is, to some extent, this is just a more extreme version of it has always been this way, right? Back to the mainframe era. You go back to the mainframe era in the 70s and early 80s, mainframe margins were well in excess of 60%. And then they dropped down below 40%, right? Then you had in the 90s, .com boom, you had Sun and EMC. EMC had gross margins above 60%. That also cratered to below 20%. So wherever there is a bottleneck of something, that's where the value will migrate. I think the bigger concern, a question maybe you have from a Western lens, is kind of the rare earths and some of the things where there are genuine shortages, and we can't. And even if we wanted to, it'd be hard to stand up more capacity because it's such a long supply chain. And it may be hard to get hold of some of the raw ingredients.
And also, we are pretty much globally looking at rate hikes this year. So I don't know how that then leans into the whole public-private markets. Lomax, I don't know if you got anything.
No,
that
I
we've
think
missed.
I would just say, yeah. I mean, go back on the memories, like history lesson on memories. There's never been a memory super cycle that didn't end in oversupply, right? So I think that is the thing to watch out for, on in that respect. But I think stepping back at the more macro level, a couple of observations. So one is the one you just point out is that there's a huge exposure and risk to rate hikes, which will, I think, put a lot of these valuations clearly under pressure, right? So you'll see a rotation out of public equities in that case. Clearly, when was the last Fed decision? It was quite recently. Or no, Kevin Walsh came out recently saying that he was going to. I think he probably talked about it last week. Is not going to go for a rate hike immediately, right? But I think there's a risk that will happen for sure. It actually looks like the Europeans did raise rates recently, but that looked like an erroneous decision because inflation in the context of Europe taped out lower than people were expecting. But that's a huge like fundamental structural risk that everyone faces in terms of what could happen going forwards. And then looking through, I read this week that hedge funds have been selling out of tech stocks at the fastest pace in a decade, right? So it sort of isn't. That was a very good article that I read this week in that with retail basically like plowing in to pick up the shortfall. Like I don't think that's a great sign. So there's definitely things to worry about.
One of the four horsemen of the apocalypse is when the smart money is selling and the less sophisticated money is buying. Yeah, that's typically
how does that fare for
top of the market?
How does that fare for SpaceX then, Mads? I mean, basically the SpaceX was held up by retail, wasn't it? I don't know if there's any connection on that one.
Possibly.
Well, let's talk about trade as a weapon. New trade wars. This week we had Trump threatening 100% tariffs on countries with digital services taxes, just days before the 4th of July US-EU deadline. We also saw VW doubling its job cuts, which obviously is not great news across Europe and especially in Germany. So we've got both blocks looking at this kind of trade war forcing to defend their champions. More nation states are reaching for economic weapons. Tariffs and taxes and all these good things are becoming the new artillery. 3 new fronts open this week. So Trump threatened this 100% tariff. Volkswagen out. Alphabet, the €4 billion EU fine was upheld after 8 years. I don't know if you guys saw that. On the actual trade deficit, the US-European trade numbers, the US runs a 200 billion trade deficit with the EU. So I would argue this is a tariff of mutual damage if this comes off. But Europe has only this one real lever, which is on the digital side, which is where most American giants make their money, why Trump is now threatening. So I don't know, Mads, maybe you can give us some details on this trade weaponization and where are we at and how do you see this playing forwards?
There is so much going on here, both East and West. I mean, if you sort of start with the US, as you say, Europe has got one lever, really. The US has got a massive deficit on trade, on goods trade. So more than $200 billion deficit. They import more than they sell to the EU. But under services, it's 89 billion surplus. And services, of course, it's not, hairdressers and people mowing lawns. It's digital stuff, right? It's really, it's Alphabet or Google, it's Apple, it's Meta. It's all the good stuff, all the tech. And Europe is a massive market for those companies. Not everybody realizes Google and Apple, they each sell for more than $100 billion in Europe, or what they call EMEA, every year. Meta, probably a little bit less, maybe half, but they're massive markets. And the challenge is that these companies are highly, highly profitable. They deliver fantastic services. We love what they do. They don't pay very much tax. Now, we like them a lot in the UK and in London. They employ a lot of people here. But even so, it would be great if they could leave a little bit more of the economic benefit they create behind, so that you don't have this deficit. And so on one hand, Trump, he's been saying, look, I don't like the deficit I have on goods, so I'm going to slap some tariffs on. And the EU agreed to the 15% tariff, agreed to investment in the US, agreed to buying energy. And Europe buys a lot of LNG from the US today. But digital was kept out of that deal. There's still kind of this notion of a digital services tax. And now Trump has said, look, I really don't like that, because he knows it's the one place where Europe really can hurt the US from a trade perspective. And so he's going apoplectic over that. How is he threatening to do that? Well, he says, if anybody does it, I'm going to slam big tariffs on them. Europe created something called the anti-coercion instrument. So it's effectively something that can be used if a foreign power threatens EU nations on trade. You can sort of gang up and then hit back. And it's actually quite powerful. It can do exactly the stuff people don't like. It can hit the services. It can hit procurement. It can hit IP. So you can actually go in and say, okay, well, if you are trying to coerce a member country, we can change how some of the IP rules are perceived and sort of dealt with. So this is the stuff where the US is strong and really can be hurt. And so there is a big battle being set up. There was almost a showdown happening a few years ago between France and the US that was kicked into the long grass. Because there was a view that, look, maybe we can refer that to an international institution. That has now been dismantled. There is no good global approach to try and regulate digital services today. And so it's just going to be very interesting to see how this plays out. Let's come back to China in a second. Let's just pause there and see if there are any reactions on that.
Lomax, you got any thoughts on this? I'm not any predictions, maybe. I mean, I'm always intrigued as to how many new European services are coming online, driven by this exact challenge, and what the reality is about Mistral serving more of France, for example, rather than buying an American service. But Lomax, I don't know if you got any predictions or thoughts or ideas around this kind of digital trade war.
No, I mean, I think it's funny. When we talked about tariffs in the past, especially in the context of Trump and the tariff wars in Q1, I guess it was all around goods. We always used to make the point that tariffs don't apply to software, which they don't, right, historically. And of course, we have the Digital Services Act in the UK and increasing efforts to try and tax that software revenue, or effectively ad spend is what the revenue really is from most of those companies. But now it's coming into the software domain, and clearly, Trump sees, given how critical AI and tech is to everything these days, it's the next big fighting ground.
Yeah, and the EU AI Act has been kicked into the long grass till end of 27, I think. I'm not sure what that would affect on this side.
I mean, I do wonder whether people in the EU are just being like, well, let's wait for the midterms, let's wait for Trump. If we make a bet that Trump will have his wings clipped gradually.
Do you think, I can't see that making that much of an impact on his behavior.
I don't make an impact on his behavior, but it will make an impact on how the Europeans react to that behavior. Because if they see effectively a person whose power is sunsetting, 1 to 2 years, while it can be a very long time in politics, it can also be a relatively short time. And if people feel that he's more of a lame duck on the way out, I think people the Europeans maybe more inclined to crack on with what they think is best and ignore the saber rattling in the White House.
I don't know. Maybe he's got one foot out, and now he's made so much money. Maybe he's got one foot out the door anyway. I don't think he cares about succession particularly. I wonder if JD will make it. Anyway, that's all on the side. Mads, what you wanted to talk about China? Where does China fit into all this?
Well, you were talking about Volkswagen. You were talking about potential layoffs. Of course, that's all about China and Chinese trade. China used to be a phenomenal market for German automakers. going back 10.
Do you remember I remember when Mercedes dropped off a cliff? Do you remember, Paul, we did this maybe a year ago, and we were looking at the numbers of Mercedes sold in China, and it was like grow. Oh my God. And then it was off a cliff, it just dropped. I think it was really interesting how this exact point.
That's exactly right. I mean, we used to say 10 years ago that China is very, very far from, if ever, in a position where they can challenge kind of Western high-end automakers. And guess what? They just figured out how to do it. And the underlying notion, it's sometimes said that there's not really anything China wants to import or buy from the West because they're driving quite a mercantilist policy. So if you look at how they are structuring their economy, consumption is a low priority for them. They want to focus on boosting manufacturing and technology, and consumption is not something that they sort of naturally try to boost in the way they think. And so for them, it's really all about...
Is that still the case,
Yes.
Matt? I thought they were trying to get more of the savers who were obviously then caught up in Evergrande and all the property shenanigans, because the Chinese market is very saver-centric, isn't it? I thought the government was trying to get them to spend and build a local consumption. Is that still not the case?
Yeah, if anything, it's in a mercantilist way. So, buying things locally, making things locally, kind of there's this notion that yes, customers, yes, but only to learn how to replicate what's imported and then make it locally. And that's not great for the world economy, because we sort of need to trade with each other. If one side only wants to make stuff and sell and not buy, we're not going to have a cycle of capital in a healthy way, and it doesn't work. Mercantilism has been tried, for hundreds of years, right? It's not a new notion. There was a reason we went away from it and moved towards a world with more free trade, but it sort of requires for everybody to play by those rules, and it seems like not everybody has got the same objective here. And so I think the US and certainly the EU is in a bit of a pickle where you sort of you almost have to retaliate, or have to find a way to get China to start importing and buying stuff, because otherwise you're going to hurt your local economy and industry so much. And so one of the questions that are coming up, China sells more to Germany, for example, than Germany sells to China today. It wasn't always like that. It was much more imbalanced until 2019, but after COVID, it's just absolutely exploded. And so why doesn't Germany or the EU just slap some tariffs on Chinese imports? And here is the challenge. Yes, China exports consumer goods and cars and things that consumers buy, but they also export a lot of the parts that go into the supply chain of European industry. And what happens if we slap tariffs on those part imports is that the cost of the input to European business will immediately go up. And what will that reflect
we're
in?
importing inflation.
Inflation.
Yes.
So
Although
on paper it looks like Europe is got levers, actually Europe is in a really tricky spot. And we can see this is exactly why Volkswagen is now talking about laying off 100,000 people. I mean, it sounds catastrophic, right, in numbers. And think about the ripple-on effects for the local supply chain, those communities. It's not great. I think it probably has to get done, because you've had an industry that is, not efficient and can't compete. So you have to make some of those really, really difficult decisions. But gosh, it's a pickle to be in.
one of my predictions from maybe 6 months ago was that the German automotive industry was going to be rescued by defense, and how wrong was I? I mean, maybe this is cyclical, maybe it's inertia, I don't know. But I assumed when you were looking at these mega factories with these hundreds of thousands of employees, I said, fine, they're going to go and make subs and kinetics and other machinery to rebuild. But yeah, I was obviously flat wrong on that one. Lomax, any thought? I want to talk about FDEs very quickly before we close off today, but any thoughts on this, Lomax, before we move on?
No, I'm okay.
I've got this thing about FDEs and forward deployed engineers. And as most people listening will know, a recent MIT study found that 95% of enterprise AI implementations or pilots delivered very little to no measurable profit impact. And we've seen a number of stories around how the enterprise is struggling to get AI integrated into organizations. And we're seeing so many more large orgs now basically, or the frontiers, the hypers, and anyone selling AI, putting FDEs, these forward deployed engineers, into organizations to effectively embed AI, get value from AI, and it just seems to be a massive movement. It's just weird. We've got this kind of what we thought was going to be much more of a tech push is now almost a human push, getting the humans back out into the market to go and implement all these incredible AI toolkits. We saw AWS became the first hyperscaler to spend billions standing up a forward deployed engineering unit. Today, Friday, the 3rd of July, I saw Microsoft announce that they're spending billions getting this department stood up. We've seen other hyperscalers and frontier labs do the same. So we're not just seeing a rotation in financial markets, but also in labor markets. But Mads, how would you tee this one up? How would you think about this one?
In what way?
Well, it just feels like we're now moving out of AEs and kind of customer service agents and getting the engineers who may or may not be the best people to kind of look at business problems and solve them with technology. It used to be a different mindset, but now it's almost like we've got this engineering cohort now coming back into the workforce to get these incredible AI toolkits into business to create value. Where is it coming from? Is it a good idea? What's going to happen with it? I don't know. Take it wherever you want to take it.
I don't think there's much new under the sun. I mean, look, in the 1970s, if you bought a mainframe or rented one from IBM would send out engineers to help install it and configure it and set it up, and it was ever thus. I think what happened, maybe the transition we've seen, is that in the 80s and 90s with packaged software, we started to see enough standardization that you went from engineers and developers to consultants that would configure, right? So if you do a SAP implementation, yes, there's maybe some scripting and some configuration, but it's not sort of hardcore engineering to the same extent. Maybe the pendulum is swinging back a little bit. I think the reflection here is it's still very new technology. The kind of LLMs are 3.5 years old. Everybody's still working out how actually to make them productive and useful in the enterprise setting. It takes a little bit more technical skill maybe than just loading a CD-ROM onto the server and configuring a few workflows. And so that's why you need engineers to do that. And the more the technology matures, the more you're going to swing back from actually needing engineers to back to configuration and setting things up. So in my view, I mean, there's nothing really to see here. This is just what you'd expect.
I literally think.
Go ahead.
Well said, that man. Like that, you've nailed it. You've nailed it on the head there, Mads, I think.
Yeah.
I think it feels like a bigger deal.
Yeah, listen, there'll be money to make.
I don't think it's a bigger deal than that.
If you are Accenture, you're not necessarily in a great place because the people you have may not have the skills you need today to compete head-to-head with Anthropic's own services unit or OpenAI's own services unit or Mistral's own services unit. But they're going to figure it out and they're going to upskill their people. And in 5 years from now, these entities will go head to head. It was ever thus, right? IBM competed with Accenture. Accenture did extremely well. IBM would send engineers, Accenture would send consultants, but they were always very, very good at developing the senior level strategic relationships that would drive deals. So I'm not too worried for Accenture. They will also be here 10 years from now.
Yeah, and also they'll obviously be doing more and better and different. But actually, it feels like we're going to see this almost explosion of new roles within organizations and within the consultancies and within the suppliers and the vendors to create the value from these incredible toolkits. And I wonder what roles are going to be created and what are going to be morphed and how this kind of circular nature of humans, because to me, the story here is that it's not AI installing AI, managing AI, running AI. There's this big human push, which I found was maybe
100%.
Maybe from the human nature side was quite interesting.
100%. No, look, it's not, as you say, just the AI is doing everything. Judgment is becoming really important because let's not forget, as the technology becomes more powerful and as you are still in a quite early stage in terms of how settled is the architecture and how, is this configuration or is this genuine new deployment? Well, that means that the person who is on point to make it work has got a lot of power. Not the power in a bad sense, but just they can do a lot of stuff, a lot of good or bad, right? If they get it wrong, it's going to destroy a lot of value. If they get it right, it can unlock a lot of value. And because fewer people can do more with new technology, you can blend the roles more. So maybe in the past, you would have needed one project manager to kind of run the project trackers, a couple of engineers to configure and do stuff, one person to run the training. And now one person can have Claude run the project tracker, can set Claude code up to do the implementation, and can answer some questions, and then maybe go do the training session themselves, right? So you concentrate value from more dimensions in a kind of in a maybe fewer people, and so that does make them more important in that sense.
I think we're going to see more on this. I speaking with one of our portfolio founders, he now makes all of the engineering team at least once a month sit on a sales call. So engineering understands the commercial reality of a client or a prospect. And I just think we're going to see much more of this. Like you say, Mads, it's kind of slightly blended. It's not just separate people, separate departments. We all need to understand from the technical perspective how this commercial thing is going to be resolved. I think we'll see more. I think it's super exciting to me, but maybe it's my soft, squishy, humanistic side. I want to talk about deals of the week. Lomax, you've got a deal of the week. What is yours, my good man?
Oh, my dear, and it's a big deal actually. So Quantum Systems, Munich-based autonomous drone maker, has raised yesterday $1.2 billion Series D. Sort of these $1 billion raise amounts are kind of they've been common in the US, but they're like becoming increasingly more ubiquitous is hyperbole, but they're becoming more common.
We're seeing them. Well, at least we're seeing them now, right? I mean, this is a big deal.
I think that's co-founded in 2015, an 11-year-old company. A kind of reminder that if you're in a hot space like drones, like Quantum Systems is, it's not that you suddenly started the company yesterday. They've been building for a long time before this became hot and sexy and relevant, right? So
yes.
A reminder that for the seed investors, you should invest in the stuff that is not the hot, sexy stuff now.
Timing and luck,
no,
baby.
But I think
timing and luck.
Very, very impressive company. They've flown nearly 20,000 missions in Ukraine in 2025. Multiple, deployments and customers across multiple geographies around the world. More than just defense. It initially started out as a civilian use case, then became defense, but it's a broader dual use company. And actually, there's being teased in the FT this week. The founder, Florian Seibel, who founded this company, Quantum Systems, and Stark, which is a pure defense company. There's now a kind of tease of potentially and Stark is backed by Founders Fund, which is quite rare for a European company. Founders Fund being Peter Thiel's big, US fund that turned 600 million into 60 billion via SpaceX. Is a backer of Stark, and there's now a merger kind of being mooted to create effectively a kind of super defense, like a European Anduril, which everyone thought was Helsing, or still maybe Helsing, which last valued at 12 billion. Actually, if these two companies came together, then you would have another big future neo prime. And it's a reminder, we didn't talk about the defense investment plan this week, which was finally released. I don't think there's a lot of new news there, but actually when it comes to defense, the UK is not a great place to be, but Germany's a much better place to be because
which kind of makes sense.
They've got more money because, they had these fiscal constraints that they wouldn't spend it in certain areas. And because they unlocked that in whenever it was in Q1, they have the kind of 100 to 120 billion to spend. So the UK is trickling out hundreds of millions. So that's a reminder there.
Show me the money, baby. Mads, what was your deal of the week?
EquiLibre, which is a Prague-based AI company, and Creandum has led a Series A at a valuation above $500 million. The size of the round was undisclosed, but it's Creandum's largest ever single bet. And what is it? They're reinforcement learning trading agents. So they're actually making AI that makes money in the stock market. And what's interesting is the backstory of the founders. So Schmidt and Moravcik are Czech PhD students who built DeepStack, which was the first AI to beat professional poker players. And it was not just in one round. They proved that over more than 44,000 hands, that it actually made something that was better than the pros. And it ran on one consumer gaming card. So they were really great at building a core algorithm that with limited hardware could do something quite impressive. They then went to join the DeepMind lab in Edmonton, and they've done a number of really cool things before going back to Prague to set up this really impressive AI lab. Now, there's some impressive people working on it. There is Murray Campbell, who co-built IBM's Deep Blue, the machine that built Kasparov in chess. There's Michael Boulding is also advising them. He led the Alberta group that was behind DeepStack. And then there is Rick Sutton, who won the Turing Award and who was the father of reinforcement learning. So in that company now and in that team, you have a person who worked on, winning in chess and making the AI that beat the chess grandmaster in 97. You have the team that beat humans at poker in 2016, and now they're beating the markets and making a lot of money for investors. So yeah, it's a very, very nice round and good to see.
Good for them. Mads, what's happening this week? What have we got to look out for?
So today we've got one of your favorite companies, Dan, Tesla. Q2 deliveries are landing. How well are they doing? Next week, we've got SpaceX joining the NASDAQ 100, and that should drive some more volume into that stock. We've also got Anthropic. They're going to move Fable 5 from all you can eat into usage credits, and we will all watch our bills soar. Same day on Tuesday, we should see Samsung reporting on the memory, or reporting earnings, Flash Q2. So that'll be sort of a test, a litmus test of the memory super cycle we've been talking about. Later in the week, we've got the Raise Summit in Paris. Are you going to be over there, Lomax? No, not for you this time. But it should be a good one. And then, of course, later in the week, the Volkswagen Supervisory Board is going to discuss the big plans. And we should know that by the time we are next week, how that pans out. TSMC will report June revenue next Friday. And that is really one of the cleanest reportings on what's happening in AI CapEx. So lots of news coming up.
Ooh, exciting. Exciting summary news. Well, that is it from me. Anything else from you, fine gentlemen, before we close off?
Not today.
We're now.
Other than I can't wait
that,
to be, next week we're going to be in person, Dan. So
we are. We're going to be doing a Lisbon special from the beach.
Yeah.
So I cannot wait for that. That'll be super fun. Lovely to see you in the real world rather than through a lens. Gentlemen, if there's nothing else, we'll call it a day. I love you both, and we'll catch you all next week.
See you in the next one.
Bye. Bye.
Outside.